Hello, everybody, and welcome to the 77th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. This, in a way, is going to be the second last program of the year as we draw towards the end of the year and just prior to the festival season. So, I think this week, as far as the global developments were concerned, we had a fairly stable global cues, and we've seen the US markets take a breather after a strong run up. And in the domestic markets, we have seen one sharp correction in the markets, and in a way quite justified, because there was quite a sharp run up in the markets. If the markets have run up by 2,500 points in the last 6 months, then I think a correction of close to 300 points is deemed as something which is very, very natural and healthy from the market perspective. Reasons which for the fall were very, very speculative. It ranged from a variety of issues which we will discuss a little later. And I think markets are, since the last couple of sessions, are trying to regain their momentum, but a sense of nervousness has crept into the market, definitely. So to start off with, I'm joined by Jash. Jash, please welcome to the show. Kindly take us ahead with the global developments and the domestic market developments, which will be followed by the sectoral outlook from my side.
Thank you so much, sir. As sir rightly mentioned, globally it has been fairly stable. We saw a strong run-up last week, which we had mentioned, because of the Fed cues of reducing the interest rate in the coming year. And that is why we had seen a sharp movement. And this week it has been very stable, not a lot of movement. I think the markets will also go into a holiday mood coming next week, because the block week starts from 25th December to 1st January. So I think in the coming week also we don't expect a lot of momentum or volatility as far as the global markets are concerned. Coming to the domestic markets, we saw Nifty reaching a high of about 21,600, approximately 21,600 points, and then falling to about 20,980 points in yesterday's session. We saw a sharp correction where we saw a massive profit booking, I would say. There was nervousness, there was kind of panic selling amongst the traders and somewhat the retailers, but in the broader sense, I think people were holding on to see what was going to happen. And yesterday, when the markets opened at 20,980 and then it regained about 300 points, that's when people started having confidence again. And but as Nirav sir rightly mentioned, people are nervous. People think that the markets are stretched. They are overbought. As far as the reality is concerned, mid caps are definitely overvalued and stretched. Large cap does have steam in it. The blue chip is seeing some kind of FII flows, and whenever FIIs have started, putting in money in the market, we've always seen the blue chips gaining momentum, and the mid caps and small caps starting to consolidate in a way. So we've already started seeing some traces of blue chip momentum in the last 1 week. Of course, the sectors that have been going up, they have taken a back step. They have started, becoming slightly on the slower side. I think these 2 days were opportunities. I think in the next week we might get some more opportunities to invest money where we had booked profits. So as if you have been taking our advice and booking profits at every up move, you definitely have some cash remaining to put in when the markets come down. So I think we are seeing some kind of consolidation and correction in the coming week as well. So be ready to invest more, and as it is Christmas, Nirav sir will also be giving some kind of Christmas tips that we'll be saying in the end of the session, and I would like to hand over to Nirav sir.
Yeah, thank you, Jash. So yes, as pointed out, that global cues have been stable. Crude oil prices, dollar index, etc. have been largely on the favorable side. But as far as the domestic markets are concerned, we were seeing signs of froth, or what we call as stretch valuations. And markets will like to see whether with respect to the mid cap as well as the small cap stocks, whether the performances are able to meet the expectations. We have sky high expectations from mid cap and the small cap companies, and they are growth oriented companies, but definitely the results have to match the sky high expectations. This is one factor. And having said that, I think it is very important to remember a fundamental difference between the blue chips and the small cap and the mid cap. In the case of blue chips, we generally tend to have time correction, we generally tend to have price corrections. But in the case of the mid caps and the small caps, it's one way, just a price correction. We generally tend to have very sharp price movements, and generally the movement is very polarized. Either you have a long bullish moves, or you have bearish moves, extreme bearishness. So there is price correction, which is the initial reaction, and after that there is a time correction, if at all. So I think it is particularly on account of these factors that the traders need to be very or cautious and circumspect with respect to the small cap as well as in the mid cap stocks. Having said that, we come to the sectoral outlook. I think starting off with auto, we've seen some signs of nervousness and fatigue as far as the auto sector is concerned. Of course, we did see some positive movement in Tata Motors, but Maruti continues to be under some sort of pressure. We've seen M&M also being largely subdued in trade. And the four-wheeler stocks are also two-wheeler stocks. Have also been on a correction mode. So I think auto is a little bit nervous going into the new year, because again the price increases have happened, and the channel inventory will remain a cause of concern. That is the auto for you. In banks, we have a different kind of picture. We have been maintaining the view that the PSU banks are a high beta play, and they are likely to come under pressure as the FII influence in the market increases. Private sector banks, on the other hand, are doing quite well, and we expect ICICI Bank, HDFC Bank to show a lot of resilience going forward into the market. We are expecting NBFCs to come under pressure on account of the recent RBI rulings, circulars. And next is, of course, capital goods sector. I think capital goods continues to perform very well. We had the Siemens analyst meet yesterday, and very strong commentary. They expect the momentum to continue as far as the India growth story is concerned. And in reaction to that, we had today Thermax and Cummins, which were up 4% in trade on last count as we go into the... So I think capital goods continues to do well, and there have been select mid-cap companies which we like quite a lot. One is Action Construction Equipment Limited. We like Elecon Engineering. We like Schneider Electric. We like HBL Power Systems. These are some stocks which we have been recommending on a very regular basis and continue to remain our favorites. Next is the defense. I think defense, as the global inventory of arms and ammunition keeps on shrinking, and the focus on indigenization, I think the defense firms are firmly in the picture and are likely to do very well. We like HAL, we like Bharat Electronics Limited, and of course a few host of other companies like Solar Industries, etc. Railways continues to be a very strong story, and as we have pointed out that a lot of companies are going to require fundraising for capex as well as for the working capital requirements. So this week we've seen Oriental Rail Infrastructure doing the fundraising, and they placed the shares and raised about 215 crores. So I think this process continues, whether it is Texmaco or whether it is Oriental Rail or whether it is Titagarh, Ramkrishna Forge. The railway stocks continue to be in the pink of health. We have RVNL, we have rides which have been doing well, and this week surprise IRCTC has bounced back after a long hiatus, So I think IRCTC is moving up. They have announced their intent to be a quality player in the catering space as far as the non-railway segment is also concerned. So I think they're going to focus on a lot of setting up a lot of canteens, catering institutions across the country. And this is in addition to the ticketing business, which is also doing quite well. So a lot of themes which are going to attract the attention as far as IRCTC is concerned. And apart from this, we have power firms which continue to do very well, power generation companies, transformer makers, distribution companies, etc., which are doing very well. Coal India is doing quite well. And in oil and gas, I think we have GAIL India, which has been a surprise mover and has been one of the biggest gainers in this particular week. Reliance Industries continues to look very good in trade. Today we had pharma, which has been doing quite well in the market. So pharma is making a comeback in the markets. And as far as the FIIs are concerned, they like select FMCG stocks where the focus is towards premiumization. So we have Nestle, Britannia, Jyoti Laboratories, which continue to do very well. And in this space, I think one company which has really emerged very strong is Varun Beverages. They have made an acquisition. And both the sister concerns which are there, Varun Beverages as well as Devyani International, they have made certain acquisitions, M&A activity over there, and I think the future for both these companies looks pretty much exciting. We've seen rebranding from Jubilant Foodworks, and I think probably the branding exercise which is that it happens only at pizza. So I think that is also likely to work well, given the fact that the per capita consumption of pizza in the country is on the rise. So a lot of themes, but finally to sum up, I think we will be having in the new year, from a very, very pilgrimage point of view oriented, we have the opening of the Ayodhya temple, and I think this will trigger off the domestic tourism in a big way. The government has left no stone unturned to push infrastructure, whether it is transport infrastructure, whether rail infrastructure, whether it is pushing the pilgrimage economy to a new high. So I think this is something which the markets will look forward to. It's going to boost domestic travel in a big way. It's going to boost the hotel industry in a big way. And I think at this point of time, the kind of preparations which have been going on for the inauguration of this temple, and I think the response which is going to come from the devotees across the country is going to be phenomenal. I think it's likely to have a huge multiplier effect on the economy. So apart from, I think, the festival season, apart from the marriage season, wedding season, which are big triggers for the economy, I think we'll see the third addition to this, which is the pilgrimage part of the economy. It's going to boost whether it is inbound travelers or whether it is NRI travelers or foreigners who visit this country for its extremely strong heritage. I think we remain upbeat on the entire hotel as well as the travel space. It's Christmas time, so I think we wish everybody the season's greetings, wishing you a very, very Merry Christmas. And I think we'll have the closing comments from Jash, post which we will be unveiling our Christmas recommendations.
Thank you so much, sir. Coming to that, I think Santa has given some Christmas stocks, so I would like you to pull it out from the stock that we have in the front of you. Yeah.
Thank you.
So I see we have removed two stocks.
Yeah, so these stocks are Hero MotoCorp and Cipla. So I think Hero MotoCorp, where there is a good potential to run up from the current levels, and Cipla, which could be a takeover candidate in the near future. So looking good from a medium-term perspective. That's about all from our side. Once again, season's greetings, and kindly revert back to us with your comments on the program. Thank you.
Thank you.